Are you ready to become your own bank and control your future? Welcome back to another episode of Tax-Exempt Millionaire Club. I'm your host, Jay. Today, I want to introduce a very interesting topic. When I was W-2 income earners, I heard people talking about Schedule E and you will pay less tax. Let's reveal the shocking truth how much tax you could save if you earning the same amount of W-2 income versus Schedule E income. I have this model board I'm going to share and we can go over this quickly. Let's look at a typical 100K W-2 income. If you're a W-2 employee, you have to pay payroll taxes. The employee portion is 7,650. We did not mention about all the other FICA, Social Security tax. Let's compare 100K W-2 income versus 100K gross real estate income, which will reflect on your Schedule E. W-2 income is subject to payroll tax, which the employee portion is 7.65%, which is translated to 7,650. For Schedule E income, real estate is zero. Deductible. Now let's look at the deductible expenses. W-2 income, there's really limited deductible expenses you could claim. While for real estate income, in the eyes of IRS, it's already in a rental business. So a large portion will be taxable deductible expenses, such as mortgages, repairs, maintenance, property management fees, and other miscellaneous. One thing is worth to mention, mortgages has principal and interest. Only the interest portion is tax deductible, not the principal. Depreciation, it does not really apply to W-2 income at all. If we use 100K property, roughly a little over 3,600 per year is the depreciation of that property. You can take that depreciation. Remember, depreciation is something called paper loss. You are depreciated on paper on your tax form. Now let's look at taxable in net taxable income. Because you don't really have much to deduct, you can deduct payroll tax and you have limited deductible expenses. There's about 92,000 will be subject to your tax for that year. Now let's look at net taxable income on this real estate income portion. Most of the case, it will be far less because you have so many deductible expenses. You're also allowed to deduct the depreciation, which we call paper loss. Coming down to the next row, the typical effective federal tax rate, if it's W-2 income, because of the amount, it falls into 12% to 22%. While on this side, if you get 100K real estate income, most of the case, it will be 0 to 15%. Because of the BBB recent tax reform, the cost segregation is back. Basically, cost segregation and bonus study will allow you to deduct a large sum allowable depreciation in your first year. And originally, because of the previous tax code, it phased out completely 2026. For this year, 2025, it was 40%, and then 2026 is 20%. Then 2027 is 0%. But now, because of BBB, it is back. You can deduct 100% for the fiscal year of 2025. Looking at this number and this number, you will know how much tax you are paying back to Uncle Sam from your W-2 income. There's some way to offset your income, which one is called REPS, Real Estate Professional Status. Here's a quick disclaimer. I'm just sharing some knowledge. All the tax codes are publicly available. It's public information. You can download the different schedules and read it through. I'm not providing any legal or tax advice. So rep status is widely used by a lot of real estate investors. The second one is the STR loophole, the short-term rental loophole. Of course, for both strategies, you have to meet certain criteria and requirements. Most of the case, there's a stringent documentation you have to do in order for you to claim those deductions and then to offset your W-2 income. Isn't it shocking about how much tax? Is it a shocking truth how much tax we are paying as a W-2 income earner? On the contrary, how much tax we can save if we have rental income instead of W-2 income. Of course, for a lot of people, you probably don't want to just make that zero and shift everything to rental income. It will be a step-by-step process. Start with few small rentals, get a feel about this, and maybe you want to get into larger multifamily, or you want to get into other alternative investment. Everyone's different. Find out what's the best for you. If this information is helpful, feel free to comment, like, and subscribe this channel. I'm trying my best to take on this 30-day challenge to make myself comfortable to talk in front of the camera. As we always advocate people to become their own banks, we want to encourage everyone, don't let the bank's taxes or outdated tax advice limit your wealth. Please consider joining TMC Tax-Exempt Millionaire Club today. Own your bank, own your wealth, future tax. I'll see you next episode. Bye.